Hi, everyone. Moritz Seibert here for Real Vision. I'm the CIO of Exponential Asset Management, and I run a series where we interview some of the most exciting crypto hedge fund managers around the world. And today it is my great pleasure to welcome you, Darius Sit, from Phillips Street Partners and QCP Real Vision. I think not for the first time, maybe the third or fourth time you've been on Real Vision before. But I do appreciate, because I do know that you are in Miami and it's 7 or 8 o'clock in the morning, so you got up early to speak with me. So good morning and welcome to Real Vision.
Good morning and thank you. Very good to be here as always.
Perfect. So Darius, let's start at the beginning with the risk of that being an overlap. But, how did you get into crypto? What is Phillips Street Partners? What is QCP? Have you always been in the digital asset space, or is there a traditional finance background that you have like many others? Just, give us the wrap. How did you get started here?
Sure. Well, I started my career in traditional finance and specifically fund management. My first job was with a large Asian macro hedge fund called Diamond Asia. That's where I learned all the basics, right? Cross asset classes, trading structures, market structures, and spent 4 years there before going to BNP Paribas in Singapore and then New York. And while I was there, discovered crypto and haven't looked back since. Started QCP Capital in 2017. QCP Capital is a full suite cryptocurrency trading firm. We trade spot, options, derivatives. We do prop as well, and quite active in the venture space too. So that's QCP Capital, and of course from that base, we were a prop firm doing a lot of trading. We decided to start a asset management company as well. So that's where Phillips Street Partners comes in. Started about 1+ years ago, and recently launched the macro fund, which is focused a lot on options, derivatives, as well as the liquid coin space.
Yeah, super interesting. I remember I had a conversation with your colleagues IZ and Simon Nursey about that as well, and we'll get into that in some detail. So, but just to to sum that up, QCP, the way I see it, 2017 is the founding year. It's essentially trading as a principal. So you have a prop book, but you're also making markets and you're providing services on a maybe wholesale basis, or maybe to high net worth individuals in the Southeast Asia region, or globally even. But then separate to that, you have Phillips Street Partners, which is a crypto-focused investment management firm, a crypto hedge fund, trading a variety of strategies in order to produce, hopefully, great risk-adjusted returns. So with that out of the way, let's speak about Phillips Street Partners and some of the strategies that you run there. And then we can go, progressively further into the details as to, what you see working these days, where you see the markets are going, what is happening with DeFi on chain. I mean, we can go in all sorts of directions, but maybe you give us a quick overview of what you do at Phillips Street Partners.
Yeah, so I mean, the strategy for Phillips Street is basically what has worked well for us trading as principals at QCP. So very focused on options, focused on DeFi, and as well as some strategic, or rather discretionary long only in coins that we think that are in the secondary markets already, mature enough, liquid enough, and that we think could have some alpha there. So big part of the strategy is carry focused. Looking at yields in futures, perps, as well as in DeFi. And a big part of it is also in options. I mean, the option space, I think, still has tremendous amount of value. It is a very, the underlying volatility is very high still, right? Bitcoin is still trading, around 70% vol, Ether's around 80-90% vol. So very attractive for, sort of carry focused strategies. And of course, the option market is extremely scalable. The growth that we've seen in the option market in the last couple of years has been tremendous. And I think it's going to be growing even more, right? Especially as, more players come into the space. A lot of banks are starting to get interested. I mean, it's the one segment in crypto where the banks actually understand, or rather the financial institutions understand the underlying, right? They can see it's they might be a bit intimidated by wallet management and DeFi and whatnot, but they look at options and say, okay, same structure, same market structure, same products, just a different underlying, and the vols are much higher than FX, commodities, equities, and more importantly, the implied volatility is higher than the realized, which is something that we don't see that often in traditional markets. So very attractive asset class, or rather as instrument class for fund managers. And I think that space continues to grow a lot as well.
Maybe we can speak about the options markets in a bit more detail, because I find them fascinating. It's my background in TradFi, and essentially what we see happening in crypto, at least through my lens, is that the structured product type of structured node industry that came into existence in the late 1990s in traditional finance, especially in Europe and in Asia, and then later on the United States, that kind of like makes a comeback in crypto land as well. Because, and you have companies such as Amber, and we can name them here. I mean, it's kind of like building the same type of products, reverse convertibles, auto-callables, people selling down in inputs or selling downside, vol, in order to generate a yield, selling premium essentially. Be that, facilitated through a broker, or going forward through a bank, or in DeFi through DOVs, DeFi option vaults. I mean, all of these things now exist. It is my perception, and I don't have a proof, but I'd like to hear your opinion. It is my perception that because of that activity, which is systematically selling up in downside volatility to generate, amazingly looking yields, the street is essentially axed short vol. Because there's, selling and selling and selling going on, that needs to be recycled somewhere and ends usually up as inventory on somebody's balance sheet, who's then willing to, offer it to, a willing buyer. Do you see the same type of dynamics? Do I have that backwards, or is that something that you see the same way?
So, very interesting question. The short answer is yes, to a degree. The fact is that crypto is still a highly speculative market, right? So we actually see, we've been seeing some of that vol compression. So if you look at vols last year in March, for example, when we had the a big move, or rather a sort of a black swanny type of event in crypto, which sort of happens once a year, you see vols go up to 300%, right? Which is incredible. And in those situations, realize outperform implies by huge margins. So while you're right, and we are seeing a lot of institutional vol sellers coming in, you actually still have a lot of vol buyers from speculation. So if you look at the options curve, it's very steep, because we have the DOVs, the options vaults, which only do about 1 week, 2 week expiries, selling systematically in the front. But in the back end, I would actually say that it's quite balanced, or even more skewed to the buy side of vol than to the sell side. So if you, and give a really good example, right? Pre FOMC, about a couple of weeks ago, we saw the entire curve elevated. Front end BTC was trading near to 100, back end was trading over 100. And the moment FOMC, actually during the event itself, FOMC, you saw the front end vol collapse from 100 to 60, because everyone knows that because of the DOV selling, the front end always gets compressed systematically, and it was a 40% drop in a day, which is incredible, right? But the back end, you see, was elevated, and actually continues to be elevated, because we have a lot of hedge funds that are coming in buying vol rather than selling. Because a lot of the traditional hedge funds that are coming to the space, because they don't want to deal with spot and don't want to deal with wallet management and whatnot, they express their views through vol. So they pay up the vols on the back end, and I think that continues to be the case. It's probably the most natural entry for a traditional fund to come into the crypto space and express directional views through vol. So yes, there is a lot of systematic selling, especially in the front end. But back end, if you talk about 6 month, 1 year vols, you actually see a lot more buying than selling.
Hey there, revolutionaries. Thanks for tuning in. For more content like this, head over to realvision.com/crypto and get unfiltered access to the most brilliant minds in finance and crypto. Join our community of lifelong learners for exclusive access, unparalleled education, and unbiased insights.